So when you first start, to create a model valuing a company, where do you typically start? Kind of maybe talk a little bit about that process.
Most companies are going to have some sort of template model, right? They're going to have already built out kind of their efficiencies. But assuming you didn't have one of those, I mean, I think the first place you start is really taking a step back and thinking, okay, well, how will this company be valued? And really, there's three main ways theoretically that a company's valued. You look at their assets, you look at and mark them to market, like their balance sheet and just market to market. You look at the comparable companies and figure out if some sort of multiple of revenue or EBITDA or, price to earnings or whatever it might be makes sense. And then you look at an income approach. And ultimately, at the end of the day, the true value of something is what its future cash flows are going to produce,
Yeah.
right? And then discounted to today from the perspective that a dollar today is worth more than a dollar tomorrow. But the question is how much more, right? And that's where your discount rate and time value of money comes into play and people's preferences and all that kind of stuff. But I think that, the first place you start is just trying to figure out, well, what type of business is this? How does this business trade in the marketplace? And, where does it look like? If it's a really early stage business, well, it might not have any revenues yet. And so you're going to have to do some sort of cost or asset approach. And a lot of those assets probably aren't even on the balance sheet. If it's a, super stable company that has really consistent growth and margin characteristics, then, an income approach probably makes the most sense. If it's a company that, has some combination of, growth and margin that's not extremely set in stone, well, maybe you're looking more so at market approach and trying to figure out how they compare to other companies on a go forward basis.
Yeah, makes sense. I mean, obviously, a lot depends on the company, the size, the stage, the industry, etc. For you personally, is there a favorite method you like to use? Like saying, all else equal, do you tend to like to do a DCF? Like if you were buying a company and any method could work, is there one you would prefer that you like to use that you think is kind of your favorite?
The nerd in me loves the discounted cash flow because
I
that's the
figured you
most
were going to say that.
robust, right? But kind of like the person inside of me that craves like the simplistic, like easy to understand, I love the market approach because it's like buying a car, right? You figure out what you want and then you go look for it and you compare it to all of the other cars and you adjust for color and mileage and features and all that kind of stuff. It's the exact same with the business, right? You're looking at an industry, you're trying to figure out how comparable it is and the best way to compare it.
Yeah, I mean, it's kind of like when you buy a home, right? They do comparables. This many square feet, this many bedrooms, this big in the yard, this many bathrooms, has a pool, it doesn't have a pool. You just go through a list, a bunch of things and say, okay, based on location and everything else, it should run you X. You're going to pay roughly this and that. And then you look at all the ones that are way outside that and you go, what happened? Why am I paying this?
Totally.
Do you have a favorite industry? Like, is there a particular industry you like to work in or model?
The reason why I've been here so long, I mean, I say so long, but the longer than I thought I would is because there's not an industry that I'm partial to necessarily, but the fact that I'm constantly seeing these unique businesses across multiple industries. I think that's what really is exciting to me is understanding how each industry and each kind of business model would command different types of desire by folks purchasing them.
What's kind of the maybe most unique business you've seen? Like one that like you really like, oh wow, that's different. I would never thought of, that being a business. Have you seen one that maybe kind of jumps out to you?
Oh, for sure. I mean, I feel like it's on a monthly basis where here in the office there's some wild company that, we're so surprised by. I think there was one that was trying to rent silverware on like a subscription basis. I thought that was pretty interesting. And I think the more interesting piece of this is not the crazy businesses we see. It's the ones that actually succeed and the ones that don't. It's not always what you would imagine. And I think that's where the real the real kind of interest occurs. It's like, there's no way that gonna work. And then all of a sudden they IPO for some crazy price, or like, oh yeah, that'll totally work. And then they go under it. And it's maybe there's a reason I'm not in venture.
I remember I did an entrepreneurship undergrad, and we had this class where the teacher had us work with companies that had come to him putting together some valuation stuff. I can't remember what the document was called now. It tells you how old I am. Yeah, this is 25 years ago. And I remember we had one of them, and I missed a meeting because it was the teacher and the other person could only meet at the time. We all thought it was a bad idea, and we told them as much. They ended up raising the money they wanted. Last I knew, they were doing very well. I'm like, knows what I know, not a whole lot.
Exactly.
So you never know. I mean, I talk to a lot of startups around FP&A software, and the one thing I've learned is just how important the team is. So much of it is, great founder over great technology. Give me the great founder, great management team any day. Now, obviously, I want both, and I want it at a low price, but that's usually not reality, right?
Of course.
I'm curious, on average, how much time do you spend kind of working in Excel versus working on a deal?
What do you mean by in a deal or on a deal?
Well, like talking to people, working with the business, not working
Oh, I
in
see what you're
Excel on
saying.
the model, kind of, right? Because you have a lot of other stuff. There's telling the story, there may be talking to people, asking questions versus the actual model building or the fun time you get to spend in the spreadsheet.
I would say that the majority of time is really spent tweaking assumptions based off of the research associated with those assumptions. I think we're all kind of geeks over here. We all love Excel. We've spent a lot of time. I mean, if you summed up the hours, it's insane, perfecting as much as we can our template model such
Yeah.
that it's as efficient as possible. And so it still takes a lot of time to build out just because there's all the financials and the capitalization table information and all that kind of stuff. And especially when you're building like complex waterfalls and option pricing models to determine the value of common stock when there's preferred stock involved, it does take a lot of time to make sure that, number one, that you get it in there, but mainly that you get it in there right and there's no errors in it. But the majority of the time, I think we spend mainly debating kind of on like the internal deal team, if you will, the assumptions and whether the multiples should be 6x or 7x or whatever it may be, because that's really where people are paying us for this, right? And I think that especially with AI and softwares coming out, like, you could probably do a lot of this with a software, but there's that human element, the art, if you will, associated with the science, that the gut check, the ability to kind of put into each valuation what we've seen in all of the other valuations and what we've seen in company purchases and so forth, that is really hard to nail, I feel like, in some sort of software AI.
Yeah, no, I hear you there. That's what a lot of people say. There's the human element and the judgment. And hey, does this pass a sniff test? Like we've all seen times when someone puts in an assumption and you're just like, no, sorry, it's not doable. Like, in 2022, 2021, if you assumed 1% inflation next year, everybody's going to look at you like, I don't know, we just came through 7%. One might be a little off, right? And so I'm with you. I think, and that sniff test is so important, that ability to look at something and be able to tell it's off and then have a conversation, because there is no right answer. It's why I love George Box has a quote. He was a scientist, modeler, physicist, and he said, all models are wrong. Some are useful. I think that's really the goal is it useful? Can we support the assumptions? Not are the assumptions right?
Well, and that's another debate that I think we often have internally at the firm, and I think just in general is, we could go in and do these complex Monte Carlo analyses and all this kind of stuff, which sometimes that is the best approach.
Sure.
But it's always the question of does the added complexity give you a better result? And sometimes the answer might be yes, but oftentimes, especially in my personal life, I think it's, generally I will err on the side of simplicity because, you can get analysis paralysis. You can look at things a million different ways and, it doesn't mean that you're going to get a better result or a better answer.